Hello, we are on finviz.com looking at the weekly chart of cocoa, and I'll take a look at the softs, the grains, the meats, the metals, and the energy, and talk about this inflation deflation argument. And this weekly chart spans 6 years of time. And during the 6 years, we've seen the price go from a little over 1500 upwards to 28.55. And thus, that's a gain of almost double from where it was in this period. And over the last few years, it has mainly consolidated within this trading range. It's been in a downtrend for about 8 months, 9 months or so, top part of this range, within the uptrend that started back towards here. The difference from this low in 2009 and the high of 3,500 means that it looks like it's corrected around 38.2%. Thus, the odds that it continues to go higher is actually pretty decent. Going through the list again on cotton, and well, this is a parabolic gain, gaining about double its value from roughly around 75 up to about 150, and over the 6 year period it has went up from under 60 to over 150. So cotton is inflating in price, and big time recently. Orange juice, from its level 6 years ago, has pretty much doubled, and over the last 5 or 4 years or so is in a major indecision mode, because we managed to get up past the 200 mark, retraced down to 70, and now it's pretty much in the middle portion within this range. Overall, though, over the last 6 years, it has been higher due to inflation. Coffee's at its high at 215. It started this chart 6 years ago, or was at the end of 2005, was under 120. So it's pretty much doubled in price. As far as lumber is concerned, well, lumber's been deflating in price. The prices have been going lower. However, one warning sign for this to go higher is that we've had this nice higher low above right around 325, a level that it had not seen since '06. It had a retracement, making a higher low. So now we're in this middle of this range from this top to this low. Really, you can say more indecisive and still bearish over the other ones anyway. Sugar, that's when you have a sell-off like this that just goes higher. That shows you that this is a failed move, and obviously over the last 6 years, this price has done better than double. Now we're going to move over to the grains. We'll start off with corn. Corn was in this downtrend for the last year or so. It broke out of it roughly at the beginning of the summer, and since that point it has went up about 50%, and over the last 6 years it has done much better than doubling. So corn has been inflating. Soybean oil, considering where it was 6 years ago, would also be inflating. It was in this range for over a year. It looks to be breaking out. The range was within an upward trend, which is reason to consider that the breakout of the range would go towards the upside. That's exactly the case. Soybean meal, it was much lower 6 years ago, roughly around 160, 170. Therefore, it's also doubled in value. And within the last so many years, we'll say 3 years, it has mainly been in a range from about 250 upwards to over 400. It's in the middle part of this range while it's been going higher. Oats, on the other hand, has had a nice retracement from its consolidation lows over the last 6 years. We've seen it go from 150 to 384, thus doing more than doubling in price. Rough rice, at the end of 2005, it was under 800. Now it's at 1530, thus has doubled. It managed to get up to 2400 in '08 and has had a huge sell-off. And with the food shortage that people are talking about, I wouldn't put too much credit into this going much lower the way things have been going high with the QE2 and all. As far as soybeans are concerned, that's very similar to the other soybean charts. It had a big gain. It's been consolidating through time, looking to burst higher. Wheat really hasn't inflated much, I guess. It still has. If you look at the numbers, it's only doubled because we went from like 360-ish, 365 up to 747. It was well over 1200 here. So since this point, it's actually been bearish. But in the last 6 years, it's double, so you can't say that's bearish. So we're having inflation there. Now, as far as meats are concerned, we'll start off with live cattle, which is $99. Don't know how it's weighted in, but it's mainly been more of a choppy, range-bound stock, neither inflationary nor deflationary. Lean hogs, pretty much the same deal. Feeder cattle, pretty much the same deal. Pork bellies, oh well. This move here doesn't seem normal. And I say that because you have a big breakout from a little over 100 to 140, and it just falls back down and trades in the same range it was before. That doesn't make sense. Yes, it could easily go from 120 to 140 back to 120, but if that's the case, you'd expect volatility to keep following. That wasn't the case. Nonetheless, if you don't count this move, it's pretty much like the other meat's been very neutral more than anything. As far as the metals are concerned, gold's now at 14.19. Obviously, it has went from about 400 up triple or so in this time frame. Silver now at 28.5, and well, this went from 7 to 28. So obviously it's inflating. Platinum at 1792. It's up over the 5-year period. It's also looking to break this resistance level here, that roughly around 1775. It's above it. Maybe we'll make a run up towards this 2000 range. As far as copper is concerned, $4 has been a significant resistance level. But if you look at this chart, you can see that it's never ever closed a Friday above $4. And right now it's 402.7. If it can close this week above 4, this should be the highest close it's had in a week, at least since 1980. I haven't seen the 1980 copper charts. Palladium is bursting higher through the seams, almost double from this low in here, which is about 400 or so. Well, with this cattail, it is 400. So it's pretty much been double. Down below here, you can see that the market was below 200. It's been going up quite high. And finally, we're going to finish this off with an energy. Crude oil, it's been very volatile with a move higher, move lower. Over the last 6 years, it has went from about 50-something up to 80. Therefore, it has been inflating in price. Natural gas has been a deflator. It started off this period going much higher, but it's went from almost 16 down to 4, losing 3/4 of its value. It's also down over the last 6 years. So this one's got a little bit of deflation. And heating oil, it's been a little choppy, still up over the last 6 years. And if anything, it's looking as if it wants to break through this resistance field and make a case maybe up towards this $3 level as a possibility. So going through all these different charts that I did over the last 9 minutes, it seems to me that there is not much deflation. A few of these charts that were neutral, and the vast majority of them are going higher. And you can take a look at the US dollar on the weekly chart and think, well, it's been going lower. That's why the commodities are going higher. And if you look at these commodities priced in every other currency, you'll notice that they're all going higher against their currency, showing that it's not the US dollar falling, it's all currencies falling more than anything. In fact, if we look at this US dollar chart, we can see here on the daily chart that we had the last 2 days before nice green candles, yet gold and silver were still skyrocketing with the dollar going higher. See that 2 green candles? If we change this over to silver on the daily chart, we can see that it's just been much, much higher. So therefore, if somebody says silver or gold are going higher because of weakness of the US dollar, they are somewhat correct. And I say that because it doesn't matter what the dollar is, gold and silver is going up because all fiat currencies are being debased and people are waking up to how the currencies are created, and thus that's why we're seeing these parabolic moves, which there is currently no end in sight for this bull market. Thank you for watching. Take care.